Here are the top picks of David Burrows. We're starting with a defense company, Lockheed Martin. So why does this one stand out over, say, Northrop or Boeing or Raytheon, some of the other ones?
Okay, so first of all, let's talk about the sector. Our premise is that sectors go into and go out of favor over periods of time as things shift. And we have just gone through a 10 or 12 year period where defense spending has been curtailed. When that takes place, at some point, they've spent too little. And you start to see politics go the other way and spending starts to pick up. So Lockheed Martin has the F-35 fighter jet. It's early days in that program. It's probably a 20-year project, selling them around the world. And there's good visibility once you start building an order book here. Lockheed Martin has been successful through the downturn. They've grown their dividend just about 19% a year over the last 5 years. That's likely to accelerate. They're going to generate a lot of cash. And so over the next 18 months, we expect to start seeing defense spending pick up. Certainly, if ISIS continues to be an issue, if Russia continues to rattle their cage, and if China gets closer to Russia, it's not impossible we're going to see a pickup in defense spending, and Lockheed Martin would be a beneficiary of that. And
it's down the road, but we could see a Republican president. You never know.
Well, certainly the politics have been going in that direction. Certainly after the new year, there's going to be more Republicans in the House than there were previously. So this is a company that should do very, very well. They get a tremendous return on their equity, and you're likely to start to see a pickup in revenue growth. It only trades at about 16 times earnings.
Next top pick here is Walmart stores. So energy costs come down, more money in the pockets of their customers.
Right. So we've talked about a couple of retailers over the last couple of times being here, and Walmart, is the retailer. Historically, has really grown about in line with GDP in the U.S. They've just most recently had their first positive same-store sales versus same quarter previous year in a few quarters. So you're seeing a pickup. We think that we are yet to see the significant pickup that comes from a little more money being in consumers' pockets because of low oil prices and gas prices. Stock's just broken out of a very long consolidation between sort of $65 and $80. And so we think that you're going to see good dividend growth. We think that you're going to see better revenue comps. And we think in general, a better U.S. economy is great for Walmart. So I think that there's a long tailwind coming here, and this is one that is relatively low risk.
Now, you were asked earlier about a big technology company, Cisco. You say you prefer Intel and some other ones. Here's Intel as a top pick. Are they in a pretty good sweet spot here?
So a lot of people used to look at copper as an indicator of what's going on in the economy today. I think we could argue that semiconductors are the equivalent today because they go into everything. And Intel is the undisputed leader in semiconductors. Many would say they are as much as 3 years ahead of their competition when it comes to the manufacturing technology, and they are accelerating their pace of innovation. This is a company that will grow its dividend 15% a year. You see our theme here. Investors are looking for dividend growth in a world of very low interest rates. Mm-hmm. It is somewhat economically sensitive. They are dominant in data centers, which has rapidly growing revenue. And the PC market seems to be stabilizing. So the story here is that they're returning cash to shareholders. They're buying back shares. They're raising their dividend. And probably it grows 10 to 12% a year going forward.
Top picks once again from David Burrows. We have Intel, we have Walmart, and Lockheed Martin. Always an education, sir. Good to see you.
Well, thanks for having me on.
Okay, David Burrows, we'll see him soon. Thanks for your questions, and we will see you tomorrow, 1 o'clock Eastern and 6 o'clock Eastern time for the Market Call shows. We'll see you then. Take care.